It is the beginning of April already, and the March stats were just released, so thought we'd spend a couple of minutes just reviewing what happened last month. The big summary here is prices continue to rise as conditions favor the seller. Sales and new listings have improved since the beginning of the year. However, March inventory levels are still the lowest we've seen since 2006. Can you believe it? At just over 3,200 properties. I mean, that's really not a lot. With months of supply a little higher than 1 month, we are still very firmly in sellers' territory. Sorry, buyers. Buyers are still facing limited choices, and this really does continue to drive up home prices. The benchmark price reached $541,800 in March, which is actually 2% higher than last month and almost 1% higher than last year at this time. Now, this is still below the highs we saw in May of 2022. However, the pace of price growth in the first quarter of this year is stronger than most expected it to be. While sales have eased from those record levels we experienced in 2022, we do remain stronger than levels we saw before the pandemic, and this is probably due to recent gains in migration. There's a lot of people moving to Calgary, and that's creating demand. No surprise here, our market challenges are still centered around supply. Can't change that. Existing homeowners may not be ready to sell because they're having trouble finding a new home for themselves. And higher interest rates may also be preventing homeowners from moving into a larger home and listing their current home. They may not qualify for that larger mortgage in their attempt to kind of move up. So this is especially true for the detached homes, where lower listings and higher lending rates have contributed to a steep pullback in the number of sales. This is the only segment actually where activity fell below long-term trends. That's for the month of March. Higher mortgage rates have driven many buyers to consider semi-detached homes. So there's some condition issues here too, and they remain very tight for properties under that $600,000 mark. Prices for semi-detached actually increased 2% from February and nearly 2% year over year. Now, townhome sales, new listings, and inventory have trended up over the past few months. Levels, though, are still lower than last year, and we saw price gains of nearly 8% year over year, which is actually a new monthly record high. Sales in March for apartment condos were down 11% over last year's record highs. New listings also decreased 8% to last year. So the market continues to favor the seller here too. The benchmark price for apartment condos experienced a really nice gain of almost 11% year over year, which is finally shifting this condo segment closer to the price recovery towards those highs that we saw actually way back in 2014. Also worth noting is after that Silicon Bank event a few weeks ago, the 5-year and 3-year bonds took a large hit and have come down quite a bit. This actually leaves room for banks and lenders to reduce their rates. I've recently seen them at 4.43%, which is quite a bit lower than what we had at the beginning of 2023. However, it is important to note that bonds have started to climb back as investors actually move their money into other markets. So as a result, rates may increase again in the near future. So if you are looking to purchase this spring, you've been thinking about it for a while, it actually could be the best time to get your pre-approval done now, get a rate hold in place, and that'll put you in a good position to buy with a pretty decent interest rate. Thanks again for tuning in. As always, we appreciate it. Please like this video, subscribe to our channel, and we'll see you on the next one.